Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this particular Tuesday. And we are on the 22nd of December, 2020 at 6:45 p.m. Central Time. You know, there's in trading a phrase that Kenny Rogers made famous. You got to know when to hold them and know when to fold them. I wish I could sing. My buddies can sing it on guitars. They're fabulous at it, but I'm the world's worst. But there's a time in the year that I start going, okay, time to fold them up. Why? When you're trading SPDRs and ETFs, you're not doing what stock investing is. It's not as though you own Tesla, or you own Amazon, or you own Facebook. I'm just giving you those names. I can go on with the host. There you're betting on the company. These are trading vehicles. You know it, I know it, and that's what they are. And as a chart analyst that talks to traders, you got to know when to hold them and know when to fold them. This is going to be super thin markets. This is not where the pros are coming in with quantity orders, other than maybe next week when they balance their books out going into the new year. In front of Christmas, there's nothing to balance out right here except you want to be getting your positions down. That's what I'm telling you. Pay attention to it. You'll keep trying to find reasons why the market is up, why is it down, and I'm telling you, it's a holiday market. Traders like to even up, and you get waves of that going on, and you don't get many times the bounce backs. Yesterday was a washout day. You saw it, I saw it, we saw what happened, and that's over. So now that took out a group of traders. You really think they're rushing back in? I have my doubts. When we take a look at biotech, it is still up and away, and I'm thrilled. Why am I thrilled? Well, we'll get to it. You've got higher lows, higher highs. The market's been over the 18-day moving average of closes, and the market is coming in on the objective that I have for markets when they're going up, which is a Bollinger Band. It's one of them. There are several. I have window envelopes as well. I have other ways that I look at a market, but that gets me excited, and you have an embedded reading. So this is a particular trade that's done very well. I added it recently because it looks so good to me on the charts. In SMH, we have a market that's fallen back to what I call the line in the sand. The red line is the 18-day average of closes. Some traders use a 20, some use a 21. When you really take in whether it's an 18-day number, a 20, or a 21, the differences are minute. The point is you're looking for neutrality on the chart. Some people want to be more with the herd mentality. Some want to be away from it. Each trader's got, or chart analyst, I'd like to say that too, has their own unique way of doing it. I know where I honed my skills. I know who I learned this all from. I know the things I taught myself. And I learned this in a very specific way in futures, brought it to the stock market and saw right away the principles were identical, tried some of the other averages, and decided to stay with what I felt comfortable with. I think you're neutral. The trend is down here. Why? And I said neutral, but I went trend is down. Lower highs. If we look, let's get over here to this low right here. This low was 210.41. This low was 210.80. I have lower highs, but I still have higher lows. You agree with that, I hope. So when I said trend is down, I meant the bias. The bias of the market is down, but you're not trending. You need to get under this 210.41 level in order for it to go. When you get these numbers, if I step back and look at this chart, I can't help but thinking that this low was under that one. You always got to check your numbers. Now, if I wanted to on my swing line, each swing line number will number itself on the way I built it. You turn that feature on in the charting software we provide to you. But it's for me too many numbers to bring on with you on videos here. Got that? When you're first learning to work with swing lines, I highly recommend it. It's why I built it that way. And you can have troughs only. I let you do peaks, troughs, a number of different ways to work with it so that you get comfortable, and then eventually you just come with what you feel like. All right. Momentum down, I call the chart neutral, just hanging at that 18-day average of closes. XLI, Remember what I said happens here. I think this is what I've been telling you. I call this a pipe. It's when Bollinger Bands get very narrow, and what the market tries to do within the pipe is give you a breakout one way or the other, and it typically gets you so frustrated you want to go to your psychiatrist because you start going crazy in the head. Why, when it was down there, didn't it keep going and break out to the downside? Why is it coming back on me? It's the nature of the pipe. And you got to be careful. The trend is down, the bias is down, but you're into support at that number. I don't fight that support. Why? 95% of the time, you're going to stay within those bands. You want to play that it's going to get under it and just keep going. Have a good time. XLE, you're down into an area that I think is where the shorts are covering now. They had today, in my opinion, a bearish API number showing a build in oil stocks. Again, they get the EIA number in the morning. Oil prices are under pressure because of the increase of the COVID-19 and the mutant of it that is taking off. But the raw numbers are just exploding around the world. I believe America has it. I think they'll start testing for it and discover that it's here already. And it does move quicker, according to science, than the other variation. Does it get you sicker? They haven't said that yet. Does the vaccine work on it? According to Moderna, along with Pfizer and BioNTech, they believe from a scientific point of view that the vaccine works on it fine. They're testing it right now to prove their thesis. But here you go, market's still in a downtrend and oversold. QQQ, the battleground's very clear. The support's the 18-day average of closes. The resistance is each time you hit the upper Bollinger Band. You have an embedded reading. Should the market take out 303.60, I'd be watching. That red line probably gets under 80 and traders will call it a day. It wouldn't surprise me at all. But until it takes that out, the bulls have control and the resistance is 312.60. In EFA, you have gone from the upper Bollinger Band to the lower. You don't have a trend. You have a market that has just taken the traders out of the market. In gold, you've got a market that's been overbought and it's in a correction stage, present tense. You still have a number in the 74 area. Both numbers have to get under 70 in order to be out of that condition. The trend is up on the swing line. The bias is up, but you're overbought and you hit an upside target. Same thing in gold miners. Look, when traders don't listen to what Bollinger Bands do and come up with a game plan. My game plan's not necessarily the right one. I know what I teach in my charting course. You'll hear me over and over that the first time you hit a Bollinger Band is where I think the pros take money out of the market. You're never going to change my opinion on it. Why? Take a look at this trade. Boom, right back down. What made the market stop there? I contend it's the Bollinger Band. I don't care what all the fundamentals are. All the news of the market is in current price. If you don't believe that, again, we disagree. But that's what it is. You don't know something the market doesn't know. Somewhere along the line, everybody's thoughts are in the market. It changes on reports. It can change on a major world event that the world wasn't ready for. Barring those two things as you're just moving along, I don't know. That's what I believe. So what do we have here? A lower low, higher high, certainly not a trend. TLT, I got a higher high, lower low, just hugging the 18-day average. Nonsense. FXE, the trend was lost. You had an embedded reading that I thought the market was going to hold and try to get through this high, right through there, to get it going at 15.11. Never did it. Lost the reading. Wouldn't surprise me that you now get back to that 18-day average to regroup. This up leg is over. That's the way to look at it. Doesn't mean the chart's entered bearish territory. That up leg ended. That's a different way to look at it. You know, one of the things that I think you should be looking at this year is maybe how the stock indices trade. They're fun. If you're trading SPYs and the others, a different way to do it than your ETFs. You can trade the 1/10 size contracts. The 1/10 size are the way to go for many people. Why? Let's assume that a margin, just for the sake of it, is $10,000. It's $1,000 on this. Let's assume that a move, and you'll see this right here, is worth $50 a full point. Now it's going to be worth $5 a point. So when you see a move, for example, in the, let's take the Dow. It moved down 200 points, all right? Well, that could be a big move one way, but it's 1/10 the other. In the S&P, if you move 30 points, it could be $1,500 versus 10% of that, $150. The commissions in futures, get ready for this. You do pay a commission. I'm sure somebody will try to figure out a way to make it for free at some point, but it's not the way the stock market works. The order flow doesn't get somebody paying them for the order flow the way it happens in the stock market. No, no, no. You're going to pay a commission. At $1 a side, come on, you're trying to be right the market, not worry about is the commission going to change the ultimate result. I don't think it does. How do you find out more about this if it's of interest to you? And I'm not saying it's for everybody, but if you think this is something you might like to see, simply go to our website at www.iraepstein.com/micro when you type that in. You hear me? /micro. You see it right through here. That will get you there. We made a separate page for it, that's why. I will be here tomorrow to finish up. There will not be updates Thursday night. I'm telling you that already. I'm certainly not doing them on Christmas either. I'll be back with you on Monday. So do look if you're watching for tomorrow. I will finish things up with you, but not for Thursday. In the meantime, I will see you tomorrow. Have a Merry Christmas. Happy New Year soon, and I will see you all tomorrow.